A very good morning to doctor. My name is Dang Yong Yong, matrix number 262826. Today, my group member and I would like to present a group assignment, which is the personal financial analysis report. Firstly, I would like to present a client's profile. Our client's name Mr. Andrew. His age is 35 years old and was married. He got two children. His children is studying in the high school right now. He estimates that his average annual earning is 50,000 ringgit Malaysia. He also estimates that the 15,000 from his average annual income will use to pay the tax, insurance, and also the cost of the self-maintenance. He also estimates that the remaining 35,000 ringgit Malaysia will use for his family's expenses. In this case, we assume that his income is equal to the inflation rate, which is the 6%. Next, I would like to present the client's human life value. The human life value is the number that indicates the present value of the future income, investment, expenditure, and also the liabilities. It can help to identify the life insurance needed based on the variables and secure for your family life. In case that you are no longer around, this value is normally used to understand how much money is needed to protect the life of your dependents through the term of the insurance. So it generally is associated with the life insurance. Mr. Andrew is expected to retire at the age of 16, so the income will be lost from the 35 to the 16. We help Mr. Andrew to calculate his human life value by using a formula, and the result is 770,473 ringgit Malaysia. Hence, we can say that if the Mr. Andrew is no longer around, this amount will should provided to the people who depends on Mr. Andrew, and this amount can live their life properly. Also, the human life value can help the Andrew to understand the future net income potential and can estimate his future net income for his family purpose at a reasonable interest rate. This amount is the reasonably accurate estimate of the Mr. Andrew's economy values to his family. However, the human life value did not include the inflation, wages increase for the Mr. Andrew, or the standard improvement for the Mr. Andrew. So that's all for my part. I will pass to my group mate. Thank you.
Metric number is 264794. Now I'm going to explain about the recommendation on tax exemption. Okay. Recommendation on what Mr. Andrew can do to enjoy more tax exemption while it can enhance his quality of life is: first, he can reduce taxable income by maximizing his retirement saving, like making pre-tax contribution up to a maximum of his salary in 401k plan or through a traditional individual retirement account, which can reduce his taxes. Second, he can consider flexible spending plans that allow to put away pre-tax expenses like medical expenses. Third, he can do itemized deduction, which are reducing taxable expenses from adjusted gross income, but the itemized deduction should be listed on the Schedule A of Form 1040 so that he can either do itemized deduction or can claim a standard deduction that applies in his filing status. Fourth, he can leave passage as tax exempt for travel whether in Malaysia or overseas, where he limits his travel not more than once a year, so that he is able to gain tax assumption limit about 3,000. Okay, next, benefit on tax assumption at workplace. Parking rate or parking allowance can allow Mr. Andrew to gain tax sum as long as the amount is reasonable, where the payment has been made by employer directly to the parking operator. Second, he can gain tax sum from petrol allowance, traveling allowance, and any combination which is up to 6,000 per year. However, this is allowed if only he used for his official duties. Third, meal allowance can also be given as long as the amount is reasonable and there usually it has been provided to all employees on regular basis. Fourth, while working in the company, the utility bills in the name of employee usually paid by the employer. For example, like monthly bills of subscription of broadband, mobile phone, fixed line telephone, which is registered in the name of employee. Okay. Next, I'm going to explain about assessing the client retirement income needs. The requirement for funding is 60,000. Retirement income should have be 80% from the pre-tax retirement income. Mr. Andrew's annual earning is 75,000. he need to have at least 60,000 a year so that he and his family can have a comfortable lifestyle even after his retirement. In about 25 years in the future, Mr. Andrew should have at least 1,500,000 after he retired. He expects inflation will average 6% for his entire life expectancy. He currently have saved 60,000 and he is averaging a 6% rate of return and expect to continue to earn the same return over time. He also have saved 3,000 annually in his 401k plan. Additionally, Social Security Administration has notified him that his annual retirement benefit in today's ringgit will be 26,000. Okay. His wage replacement ratio is about 60,000. It's realistic to use wage replacement ratio because Andrew will get to know the annual income after retirement. Basically, wage replacement ratio is nothing but a measure to calculate the annual income after retirement to annual income before retirement. Taking inflation into consideration, present value of money should be calculated as follow. So his annuity amount is 222,604.13. Looking at his current resources, he does have sufficient fund to reach his retirement goal, which is 103,3512.24. His surplus is 810,908.11. Okay. At retirement, he expects to live another 30 years, which is until 90 years old. So the number of years to calculate the retirement is 90 minus 60, which is 30 years. The number of years taken by Mr. Andrew to retire is 25 years from now, since he is 35 years old. He also expects that he's in the age of 60 he would like to retire. However, to gain benefit from Social Security, the early year to receive the benefit is 62 years old. If he receives this at that age, he will still receive the benefit, but it will be reduced. But since he had decided to retire at the age of 60, he might lose the chance to obtain this type of benefits. Thank you.
Good day, sir. I will continue the presentation. My name is Nur Shuhaida. Matric number is 264693. My part is evaluation the client's available resource. So the resource that are available for Mr. Andrew retirement is unit trust and EPF. Unit trusts are a sort of mutual fund that can store assets and distribute profit directly. The problem of having too many alternatives and not enough capital is solved by unit trust. Mr. Andrew will require substantial sums to diversify his interests, that because diversifying a portfolio with a numerous different stock and asset can be tough. This is where a unit trust can help him diversify his asset. Next, the Employees Provident Funds, EPF or KWSP, is a Malaysian government body that oversees a mandatory saving plans and retirement planning for private and non-pensionable public sector workers. The EPF is funded by monthly contribution to saving account for employees and employers. Mr. Andrew can withdraw 30% EPF at the age of 50, and at the age of 55, he can withdraw full amount of EPF, but he can withdraw a one lump sum if he becomes handicapped or migrates. Mr. Andrew currently has a unit trust 40,000 ringgit and EPF 120,000 ringgit, which is placed in a retirement account with a return of 5% per annum. We assume that the number of years in this retirement phase is 25 years, so the amount of the annual retirement fund, ignoring inflation, should be 10,811.80 cents. However, if the retirement phase is increased from 25 years to 30 years with other variable unchanged, the amount of the annual retirement fund should be 9,912.60 cents only. Hence, we assume that Andrew should withdraw the funds after 25 years and not 30 years because the value of the fund will decrease over the time. Okay, next, I will continue with assessing the client risk tolerance. Risk is defined as the possibility that an outcome will differ from the expected outcome or return. Mr. Andrew needs to understand the principle of risk and how it is measured that make it possible and wise to control investment risk. Each risk profile is unique and it impacts his willingness and ability to take risk. The link between risk and return is a key concept in investment. The higher risk Mr. Andrew is willing to accept, the higher possibility he will get. since Mr. Andrew expected to retire at the age 60, which means 25 years before retirement, will have a higher risk tolerance than a casual worker at the age 55. So it is really important to Mr. Andrew to have ability to take risks which are evaluated through a review of his asset and liability. For example, his wealth fund retirement account, sufficient emergency saving, insurance coverage, additional saving and investment that have a high liability to take risk. So Mr. Andrew can also be a moderate investor, which means reducing risk and increasing returns equally.
Hello, my name is Roshazimeti Manase, number matric 264703. Now, I would like to talk about the recommendation of the suitable investment. So there are three investments that are suitable for Mr. Andrew, which is the first, Exchange Trade Fund, ETF. So this is because it can allow us to diversify our investment with a low amount of capital. Besides that, it can also help us to generate a constant dividend for every year. The second investment is fixed deposit, FD. This is because it has a low risk and it's also able to generate a consistent return as the financial institution cannot guarantee the return. Besides that, we can also gain a fixed deposit even if there are some effect to the inflation. The third investment is Malaysia government bond or securities. So, this investment is the safest investment. Besides that, it can also guarantee the return and the government as a backing of this investment. This investment also has a coupon rate of 2% to 3% and a maturity of year from 3 years to 10 years.
Good day, Dr. Oy. My name is Ashrita Nair. My metric number is 273259. So today I will be presenting about advising the client on the importance of estate planning. So before we look into the importance, let's look into what is estate planning. So estate planning is something like preparation to manage an individual asset after their death. This planning will be including three main things. So the first one is about will. Will is a written or legal document that expressing an individual wish to how to allocate or how to manage a person's asset after their death. So the second thing is about trust. What is trust? Trust is more likely to be you giving access to a person or another party to manage your own assets. The last one is about giving charitable donations. This planning also will be including beneficiaries. So beneficiaries is someone that who gonna get your wealth or your assets after your death. So here is the first importance of estate planning. So the first one is about protecting your beneficiaries. Okay, by doing an estate planning, you can able to protect your beneficiaries from making any type of bad decision or credit or debt or loan that they took. Okay, so the next thing is you can able to appoint an individual to make decision about financial or health decision on behalf of you when you are not in a good state or if you are not in an unstable condition. So usually unstable condition we can't able to predict that, so it is better to do an estate planning when you are in a good mental state. So the second importance of estate planning is about living trust. Okay, living trust is more likely to be a legal document. It is where provide management of your asset and also give benefit while you are still alive. And you can able to name the person who will be able to get your property or your asset right after your death. So this trust is more likely to be revocable, which is mean you can able to change or do amendment while you are still in life. So right after your death, the person who you name as your beneficiary will able to get all your property and asset immediately. The last importance of estate planning is about avoid probate. So probate is where the court will process your asset, your will, your trust, and also will be paying off all your debt and also your taxes. So this is where the remaining balance will be given to the person who is rightful heir or your spouse. Usually court will decide the rightful person. And then this process will be taking consume a lot of time. Usually will be taking around 6 months like that. And this also will be very stressful for your family because a lot of time consuming and also it's extremely costly. So from the three importance, we can see the client have to need to understand the importance of estate planning. So by doing all these estate planning things, you can able to avoid probate, and then you can able to protect your beneficiaries, and also you can able to manage your asset properly.